How much would you attribute the underperformance in Amazon to Andy Jassy's leadership style?
Andy Jassy has been doing a fantastic job, in my opinion. I feel there's been a trifecta of headwinds that Amazon, along with many other internet companies, are facing. On top of that, there is exec departures. Two new CEOs, Adam Selipsky, Doug Harrington, leading two of the biggest internet platforms in the world. So I think next 12 months, what I'm excited about is as we lap through the COVID kind of pandemic pull forward, as we lap through the inflation headwinds, and we get new execs running full steam ahead, that's the time to buy Amazon stock. And that's where we like Amazon here. Next 12 months, we get to see all these three things move through the pipe. And in Amazon, we trust.
But to respond to the growing macro pressures, as you just highlighted, whether it's inflation, whether it's slowing growth, what does Jassy need to do right now? Raise prices, expand their footprint in other markets? What do you think that what he needs to do right now to help this company rebound?
In the near term, I think what investors want is a showcase of what the core retail business, and what margins can the core retail return back to. They have obviously overhired. They accepted that. They had overbuilt fulfillment centers. They did accept that as a mistake. So over the next 12 months, they need to grow retail and have margins in retail expand to a level that perhaps could start showing signs of real sustainable profitability. What Amazon is investors are worried right now is, where do retail margins go from here? They are not worried about cloud. They are not worried about advertising. They are really solid businesses with expanding margins. But retail, the core e-commerce, as people are swinging away from buying goods to buying services, and Amazon is overhired and overspent on fulfillment centers, that's where the hot button is. If Doug Harrington is the guy who turns that around and shows margins, that's when you buy Amazon stock. And we believe that that's about to happen starting 1Q of 23.
The company split their stock in early June. Typically, history shows that when a company splits their stock, you see it bounce, but that didn't happen in this case. Amazon has continued to trade down. You talked about retail being a core area of opportunity, but what about Amazon Web Services? Are they starting to see more competition from Microsoft, Google, other cloud players? Is that a concern?
I think, in my opinion, Amazon is a very distant leader above and beyond Microsoft and Google and some other kind of fast followers. They have more than 30% margins. It's a $60 billion annual run rate revenue business, and they're adding more services at a clip that no other competition is doing. On top of that, I feel Amazon Web Services is on the cusp of vertically integrating hardware, software, network in a way that could disrupt many other companies in the networking and storage space. So I feel there is a lot more greenfield opportunity for web services. I feel they still remain undervalued, and Selipsky is the right guy. Probably acquisitions are something that we could have some positive surprise over the next 6 to 12 months from AWS.
All these high growth names that had such a strong bull run and are now cut back on spending. What comes to mind is Netflix, which that stock is down 70% this year. When it comes to Amazon, where does it start to cut back on spending? How does Prime Video hold up amidst all this?
To some extent, I believe they have already shown hints of cutting back on spending. They've already indicated that they will not be building too many new fulfillment centers. So to some extent, capital expenditures are going to start to slow down. They'll still be at a very record high growth rate, but still they have accepted that some parts of the business are going to slow down spend. They have stopped hiring in some parts of retail. So there are, again, as Amazon does, they would continue to spend and probably be opportunistic in these slow times to hire more talent and expand into places where other people might be retrenching. So now is the time probably for them to double down on certain places such as Prime Video, such as Prime overseas, and so on and so forth. So I feel they may be opportunistic in expanding, but pulling back on places where they feel that investors and investment community wants to see margin, and that's retail.